Hello and welcome to another fresh edition of Focus On. I'm David Alabi. On this episode, we throw some spotlight on the maiden International Financial Inclusion Conference since the 2012 Financial Inclusion Strategy launch. Now, the National Financial Inclusion Steering Committee of the Central Bank of Nigeria plays host to the two-day hybrid event, pulling over 4,000 delegates from over 80 countries and sets a new trail to deepen financial inclusion to the last mile by scaling innovative digital models. The highlight of day one marks the official launch of the revised National Financial Inclusion Strategy 3.0 and 4 other strategies. Now, all of these are expected to move the financial inclusion mark from the current 64% to the target of 95% by the year 2024. Let's walk you through the journey from Nigeria's signing of the Maya Accord in 2011 to date.
From 2012 to date, over 59 different policies and initiatives have been implemented by stakeholders to achieve the objective of financial inclusion. These policies and initiatives cut across the banking sector, the insurance sector, the capital market sector, the pension and institutions responsible for infrastructural development for financial inclusion in Nigeria. That whereas our financial inclusion rate today stands at close to about 65%, that by the end of 2024, we should aim to be at 95% rate of financial inclusion in Nigeria. Financial inclusion for us is a very, very important strategy towards making sure that we achieve growth and development in Nigeria. We are very determined to achieve this, and that is the reason since 2012, when we made our commitment at the Maya meeting, we have done everything possible to put in place various forms of infrastructure or payment system infrastructures that will help deepen financial inclusion in Nigeria. Nigeria, as the largest economy in Africa, must stand tall and be seen amongst many nations in the world that have tried as much as possible, not just in deepening financial inclusion to ensure that everybody that conducts financial service transactions in an economy are able to do so, but that we must embrace a cashless economy because it is going to be for the benefit of everyone.
What we see for the future, we're very confident. And I know some of you may be thinking 95% by 2024. We're in 2022. At the end of it, how are we going to achieve that? We think that we have we've built over the years a strong policy environment that is responsive to this goal, because we understand just how important it is for our monetary policy objectives, for our development objectives, for economic growth objectives. We've created an ecosystem. Yes, regulators, policymakers, and innovators are not always on the same side. But I think that the fact that, depending on who you talk to, 3 out of 5 unicorns or 5 out of 7 unicorns in Africa are Nigerian, tell you something about the ecosystem that we've built. We went round the innovation labs earlier with the ministers and the governor, and the sheer diversity in terms of the solutions. Some of them were looking at rural areas, some of them were looking at payments and POS, some were looking at women. There was an exhibitor from Egypt that was looking at gathering data from POS use. All of that reflect just what's possible. And the next step for us is to deepen our collaboration. Of course, we need to get alignment. We need to continue to engage the ecosystem, get alignment, but deepen our collaboration to ensure that all of these creative solutions, these innovative digital solutions are scaled for success. It is only as good as how it impacts people. We continue to encourage innovators to also include financial inclusion as one of their goals, because we know that when everyone's included, the ecosystem is better for it, the companies are better for it, the country is better for it, and more importantly, the citizens are better for it. Now, in terms of the 3.0 that we're launching today, this now focuses more on the specific excluded segments. As Queen Maxima said in her speech, if you're urban, most people do have access to, electronic banking, mobile payments, and all of that. We need to start looking at those specific segments that are excluded or that are not meeting the national average and that are not meeting the Africa average and the global average. And that's what 3.0 is about.
It is very important to realize that today, the digital economy sector on one hand and the financial sector on the other are coming closer. There is a convergence between ICT sector on one hand and financial institutions on the other, to the extent that it is becoming difficult by the day to draw a line of demarcation between them. And that is why we have been working in collaboration with the Central Bank of Nigeria when it comes to their mandate of either e-Naira or any USSD services, as the case may be. And at the same time, they have been collaborating with us whenever we need their intervention in the core mandate of either the ministry, parastatals, or any responsibility assigned to us by our boss and our principal president, Muhammadu Buhari, GCFR. As we all know, and this is what we have been agitating, that indigenous digital economy cannot be developed without 4 ingredients. Number 1 is broadband penetration. Number 2, bank account. Number 3, digital identity. Number 4, smartphone. These are the 4 ingredients for building an indigenous digital economy. And if any one of them is missing, it is difficult to achieve any significant progress.
Moving forward, we can explore how the NIN and banking verification numbers can better integrate and complement each other's objectives. Quick passage of the Data Protection Act will further support digital service delivery. Second, we can ensure that services and businesses are able to sustainably reach the last mile. This includes the fintech sector, whose impact on financial inclusion has untapped potential, which can be enhanced through a range of policy measures. Making fully operational the regulatory sandbox efforts and simplifying licensing frameworks will be really key here. Making full use of tiered KYC rules for low-income and rural customers, expanding shared agent networks, and further investing in mobile and data network coverage is key to reach rural clients, including in northern states. Third, this is an opportune moment to close the financial gender divide in Nigeria, which at 20% remains significantly higher than the sub-Saharan average. Ensuring gender parity in access to digital IDs, mobile phones, and digital connectivity is an ideal place to start. The time for action is now. For my part, I look forward to continuing to work closely with President Buhari and Governor Emefiele, sharing best practices and technical resources, and encouraging a coordinated approach across government and the private sector. Thank you so much, and I wish you all success.
Panel sessions explore the task ahead, dissecting policy measures and nuances from other regions of the continent to inform Nigeria's next move towards financial inclusion.
From the panel we moderated, which was really looking at global experiences around financial inclusion. So we had lessons from India, Egypt, Kenya, and the rest of Africa. And some of the nuanced things that we learned were, it's not an insurmountable challenge. Because if you think about India, with a population of 1.3 billion people, was able to open and onboard 400 million people into the financial services ecosystem. So it's not insurmountable. In areas like Kenya, it was really about indigenous solutions and enabling regulations, and also a test and learn approach to ensure that we can see what the technology can do. But again, with the brakes on because of the risks and the consumer protection issues. From Egypt, we also learned that there's an important role innovation and fintechs have to play in the whole ecosystem, because we find out that some of the unconventional methods that we need to address these things will not come from traditional providers, but will come from the new providers who are willing to seek to do differently, to seek to do more, and to build network effects. And from Rwanda, we also learned through FSD Africa that it's important that to have the policies, but also implementation and acceleration of these policies is also critical to ensure that the successes can happen. So by the time you put all these things together, if we take the different bits and pieces, we should be able to leverage and do more.
So you're going to see the likes of the INARA driving productivity, driving inclusion. You're going to see the likes of many products they're coming out with. I remember the DG, Madam Aisha, mentioned INARA 2.0. And I'm excited about the kind of things it's going to drive with inclusion, with account opening, with how cash will be used in offline segments.
We already have 1.4 million agents, so what I presume is that we will build on this and be able to now use those agents for financial inclusion. It's not enough to have, 1.4 million agents out there. What do they do? And we want to go beyond cash in, cash out. We need to open accounts. We need to open wallets. We need to make sure products are available. We need to make sure that, the last man there is reached. So those are the things that the agent locations would work on going forward.
And if you look at the agent network we have in excess of 1 million today, we're looking at how we can provide incentives for them to be able to establish access points in those underserved areas. Because once you have access points to those underserved areas, you can begin to benefit from some of the interventions we do, especially for MSMEs and small businesses. So once with the infrastructure in place, with the financing window that already exists in the Central Bank of Nigeria, we do believe we can reach those underserved locations.
The conference also launches the CBN Regulatory Sandbox and the establishment of the Nigeria-Egypt FinTech Bridge, a first link with prospective building other bridges with the rest of Africa.
A lot of nuances. We're seeing a trend where the technology is going beyond borders. The innovation is going beyond borders. And the regulated institutions are also going beyond borders. And if we are to harness the opportunities within Africa for fintech to support financial inclusion, to support economic growth, it is important that the policymakers as well move beyond borders. The policymakers need to collaborate a lot more, and we're very proud of this memorandum of understanding that we've executed. And what it entails is that we will share ideas, we will share regulatory initiatives, we will try to cross-introduce, because we're seeing a lot of interest in Egypt and Nigeria. These are the two largest economies in Africa. The landmark, significant investment that Africa has seen in tech has been, I think, in 4 countries, of which Nigeria and Egypt are the top 2. I think Africa attracted 54%, in 2021 of all fintech investments from outside Africa. So we're very proud of this collaboration. It is the first. I think that more economies may join this bridge because there'll be more opportunities.
An award ceremony climaxes the activities at the conference, recognizing partners and champions of financial inclusion initiatives. Truly, the IFIC 2022 is leading important conversations on closing financial exclusion in sub-Saharan Africa. And on that note, this brings us to the end of this focus on the IFIC 2022. Thank you so much for watching. Bye for now. I'm David Alabi.